Crypto Hotep here with another investing video. We are on week 72 of the family portfolio and dividends tracker. Really appreciate you guys, whoever's listening, watching, really appreciate it. If these videos are helpful, feel free, please like, subscribe, comment. That supports the channel, supports me, and helps with the algorithm to deliver these type of videos to like-minded individuals like yourself. But by no means is this financial advice. If this is your first time watching the video, feel free to go to my channel, go to week number 1, and then that way you can see the whole methodology of these videos that we make. And basically what I did was I shortlisted several companies and stocks for my family to choose from. They chose the ones that were most pertinent to them or ones that they knew and felt comfortable with. And then we proceed to use M1 Finance as our broker of choice, because M1 Finance, you're going to see, you can have a big portfolio and then have little sub portfolios within it called pies. Every one of my family members has a pie of his or her own choosing of those stocks. And then every week we document this investment journey and we discuss balances, dividend activity, the news, how the news affects our assets that we're investing in, and hopefully building generational wealth all in one here. But before we go to week 72, we always go back, and it's been 2 weeks since the last update. And the reason is last week, my wife and I were actually out on vacation out of the country. So I wasn't able to make a week 72. So week 72 is going to be now. So about 13 days ago was week 71. We had a balance of $28.52 and 19 cents with a market gain of about $117.23. And that came up to, let's see what percentage that was. Let's see if it'll go down here. I think that was about 6.12%, and dividends earned of $16.39. So let's go to this week, week 72, and let's see where we're at. So week 72, we hit another milestone, over $2,900 in the family portfolio, $2,917.03 to be exact. We have a year-to-date market-weighted rate of return of 8.29%, and that's a market gain of $164.38, dividends earned of $18.91. And with that being said, guys, we're going to go to the activity. Let's see what's been going on for the past almost 2 weeks. We're going to scroll down here. So the last update, we talked about the dividend activity with Lowe's. Then after that, we had a dividend payout for Deere & Company of about 4 cents, and then American Express of about 8 cents. We also had one buy in the afternoon, probably with some money that we just had lying around. We bought some Visa right here. And again, guys, if this is your first time watching a video, or maybe this is your first time new to investing, you don't need a lot of money to start investing, especially with brokers like M1 Finance. You can buy what we call fractional shares, where you can buy little pieces of companies with fraction of the dollar. So, such as, look at this, Visa itself is in the hundreds of dollars per share, but you don't need to buy a per share, or you don't need to buy Visa by the share, and you can buy it with as much money as you have currently. Okay, so that was one buy we had. And then we had some dividend activity from Apple, which was pretty cool. And then we did have our regular deposit, which is right here, our regular deposit of $15 right here. And typically, if you're following this channel, we don't put a lot of money into this small account. We want to see this small account grow. So we want to showcase that you can build that generational wealth with very, very low income and very, very low deposits. So every 2 weeks or so, we'll put about $15 in there and spread it across the whole family. So here's that $15, and then these are the buys that we did do. So we had McDonald's, Starbucks, Visa, bought some more Visa, Google, and then Amazon right here. Okay. And then also we had some more dividend activity. So we had Procter & Gamble, 7 cents, Costco, the GOAT, 54 cents, Colgate, 4 cents, O Realty, 65 cents, and then Caterpillar 7 cents. And then with all of those little bits of dividend activity, we did have a couple buys here. So we separated a couple buys. These are in my portfolio: Waste Management and Cintas. And again, I split those two buys with that $3, as you can see here, $1.08 to Waste Management and then $1.91 to Cintas. Now, if you are looking at these dividend activities and saying, hey, crypto, that's great, but that's only 77 cents. That's fine, but that's only like 2 quarters right here. That's 54 cents. You are correct. Again, when you're investing, particularly when you're dividend investing and you have a small account, those dividend payouts are going to be small. The dividend payouts increase with the more shares that you have of that company. But when you're just starting out, these dividends are going to be teeny tiny, and it's just going to have to act as a snowball and build up. Okay. So primarily what I'm saying is don't focus on the number itself. Just focus on the fact that you're getting an increased payout every time, because that's what should be happening. Okay. And with that being said, guys, let's go to the portfolio here. We have some movement in our family portfolio. Let's look at, and as we always do, we go bottom to top, but guess what? The regular individual, my wife, who is normally on the bottom, is no longer on the bottom anymore. That's correct. Now our middle is on the bottom here. So let's see what's going on with our middle. So our middle has a balance of $348.52 in their portfolio. Dividends earned for their portfolio is $2.58 with a money weighted rate of return year to date of 1.53%. So the main driver, or the main detractor, I should say, for our middles portfolio is Target. Target recently replaced their CEO or their C-suite executive this week. Actually, the announcement came. So hopefully that shakeup in leadership will do something with Target, and we'll see somewhat of a turnaround in the company, and then see around in the stock as well. Starbucks still down over 2.5%. Tesla down over 10.5%. It's kind of stagnant right now. But Google up over 36, Sony up over 26, Amazon up over 3, and then Costco doing what it does normally, up over 5%. I'm not really concerned about our middles portfolio. They're all solid companies. Target's just having a rough time. Tesla's trying to gain its footing back. That's all it is. Next is our youngest. Our youngest has a balance of $384.95, a money weighted rate of return year to date of 6.26%, dividends earned of $1.56 here. So very similarly with our middle, the youngest holds Sony, 31.87% gain, tremendous, can't beat it. Costco again up over 5% at 8.3% year to date. Apple is still trying to hold, or still trying to find its footing in our youngest portfolio, down, but only down 1.65%. The position in Apple has always been down considerably over the past months, but we've closed that gap even further. Tesla down over 10%, and then Starbucks down over 1%. Okay. And my wife is in third place right now, which is, her portfolio is blowing everybody's out of the water here. And we've said this kind of, it started several weeks ago that the momentum was picking up, and I saw this ahead of time, and I said it was just a matter of time before my wife's portfolio just flies and just knocks everybody off, and that's what happened. So my wife has a balance of $385.97. Money weighted rate of return, ridiculous number, 41.54% gain, unrealized gains, but gain year to date. Dividends earned of $1.30. It's crazy. Look at this. Celsius. Your money weighted rate of return year to date of 155%. That is insanity. But not only that, because I texted my wife when I saw this. I texted my wife that she had bumped up so much in the family portfolio within a short amount of time. It was tremendous. Look at this. Pepsi is almost at 10% year to date. That's great. Even Google's up over 15%. And then Tesla, again, we're closing in on the disparity with Tesla. I'm gonna tell you this: when Tesla starts running, because you know it's just a matter of time, and Elon now is focused more on his companies now. That was a news article this week that Elon has kind of foregone trying to start another political party that was really Bitcoin focused, and he wants to focus more on his companies. If he does that, you can see Tesla's going to turn green in a second here, and my wife's portfolio is going to fly even more. It's crazy. But Celsius, and what's crazy is I think Celsius has even more room to go. Right now, Celsius is trading $62 a share. We were buying down at $30, $32. We were buying Celsius whenever, however, and we're still buying Celsius. So again, it just shows you that if you can have the stomach of knowing that your portfolio may be down for some time and just have the conviction of those companies, you'll be just fine. Right? Did it stink that my wife's portfolio was always in last place for several months? Sure, it did. Was she frustrated with that? Yeah, she was. But we stuck to the course. We continued to put money in, and now these are we are bearing those fruits, if you will. Okay. And last but not least, our oldest as well. Our oldest is down now over 2.5%, but our oldest is closing that gap, which is good. Dividends earned of $3.48 with a balance of $859.83. Very similar. Apple is down over 5.5%, but again, we're closing that gap. Tesla down over 15%. We've already talked about that. And then McDonald's. McDonald's made huge news this week saying that they are going to be cutting their prices, their combo meal prices, by 15%. The markets love that. McDonald's is up year to date in our oldest portfolio over 10%. And then Costco, again, closing in up almost at 5%. Okay, that's huge news for McDonald's because a lot of people view McDonald's with the state of the economy. So if McDonald's admits that they are expensive and they are willing to slash their prices, that's huge. That is huge. So, and then last but not least is my portfolio. My portfolio, despite the little dip in the market here, my portfolio balance is $937.76. Money weighted rate of return of 13.56% year to date, with dividends earned almost at $10 at $9.99. Every sector is in the green, which I love to see. Technology, as always, guys, holding the weight here, 26.06%. And as you guys know, if you've remembered, you followed the channel, I did consolidate my holdings here. So now I only have about 11 or 12 holdings here right now. Google, Microsoft, keeping it real simple here, and you can't go wrong with those two. Finance, as you've seen, we have Visa and Moody's right here. Again, keeping it really, really simple here with simple companies that I know what they do and how they make money. The real estate, that's O Realty Group, which is the dividend money maker here. And then consumer and staples, we have Lowe's and Costco here. Lowe's had tremendous earnings this week actually, and is also doing an acquisition, which is great to see. So all in all, my portfolio doing fantastic. I'm beating out the S&P 500. I couldn't ask for anything more besides that. And the family portfolio altogether has hit another milestone of over $2,900 in balance currently. So again, guys, week 72, we're ending at $29.17 money weighted rate of return of 8.29%, and dividends earned of $18.91. Guys, if this video was helpful, feel free to like, subscribe, comment. Let me know what you think. It helps me out. But as always, thank you. and happy investing.